investing is just like comedy. It's all about timing, which is one reason why I'm so darn funny. When you're trying to buy a stock, especially a really hot stock, you got to be patient. Keep your powder dry, then wait for the right moment to pull the trigger. Or maybe you're a baseball kind of guy, all right? You want to prefer that because of spring training? You want that metaphor? Keep your bat on your shoulder until you get the right pitch. Like that. Don't just swing at every ball that comes down the plate. That's a recipe for striking out. I say all this because tonight I'm finally going to tell you about a speculative stock that I've waited, literally over a month to highlight. It's called Cornerstone OnDemand, CSOD for all you home gamers, and it's a cloud-based provider of software as a service. You know, that SaaS, software as a service. You hear that a lot. It's about employee recruitment, training, and performance management. In plain English, Cornerstone basically lets companies outsource their human resources departments to software in the cloud, and this has been this is a viral trend. Now, we know the enterprise software as a service space is on fire. Think Cramer fave, Salesforce.com, Red Hat, or the just launched IPO Exact Target. This prop is just paid for itself multiple times over. Oh. All right, anyway, even in this smoking hot group, Cornerstone's been reporting some of the strongest year-over-year growth out there. The numbers here are staggering for CSOD. Meanwhile, Cornerstone's competitors are being acquired left and right. Remember SuccessFactors, the cloud-based software company that enterprise giant SAP announced it was buying back in December for $3.4 billion? They're in the same business as Cornerstone. And then in February, Oracle decided to snap up Taleo. That's another human resources software name for $2 billion, featured prominently in their conference call. When we see this kind of consolidation happening in one particular area, we always ask, what looks like SuccessFactors? What looks like Taleo? And after these deals, it turns out Cornerstone OnDemand is really the only independent player left in this particular space, part of the cloud, okay? Yet the stock's been flying almost completely under the radar. In the clouds. Nobody has been talking about Cornerstone, this little company, billion-dollar market cap, $20 share price, and downright astonishing revenue growth. These are all the ingredients you typically find in a successful speculative limited awareness kind of rocket-propelled growth rate stock. And competitors are taking each one out? Wow. Now, all that positive. Price does matter. Remember I said about timing? Even though I was intrigued by Cornerstone, even though I found its numbers to be downright seductive, I waited to tell you about it. The reason? Because when I first learned about the stock, it was roaring every day, day after day. It seemed to go higher. It seemed to be in the grip of a parabolic move. That's no time to buy a stock. We never like to chase here on Mad Money. If there's any real takeaway of this Speculation Friday, don't chase. When you purchase something that has had a massive amount of momentum, especially when it's speculative, that's often a great way to really hurt yourself, or at least give your portfolio whiplash. Instead, we waited for a pullback, and we pick our moment. And it finally looks like we've gotten a buyable moment in Cornerstone. In the last couple of weeks, the stock's pulled back by about 10% from its highs, actually a little more. And even though it edged up about 1% today, recommending it here doesn't give me a sense of vertigo. So now we can consider the many things that Cornerstone has going for it without feeling like I'm strapping you into the passenger seat of a car that's moving 200 miles an hour with no airbags but a camera behind your head. There are so many ways to win here. First, the takeovers. If you value Cornerstone the way Oracle valued that Taleo, or even better, the way SAP valued SuccessFactors, they put up 52% premium. This stock could be worth at least 15% higher than where it is trading right now. But that's not even the main way Cornerstone benefits from these deals. Remember, with both Taleo and SuccessFactors taken out, this company's the last remaining independent human resources software as a service play. Now, typically, whenever a competitor gets acquired by one of these giant firms like SAP or Oracle, the other independent players will swoop in like vultures to convince the clients of the companies being acquired that they're about to be lost within big, faceless corporations that don't really care about their business. Also, as these acquisitions get integrated, the companies being acquired tend to go dark for a period of time as they transition their systems over, change their salespeople, tweak their operations. All this creates a terrific opportunity for an independent player like Cornerstone to move in and steal away clients. Remember, it's in the cloud. There's not a lot of infrastructure. They can do this. So we've got two potentially lucrative catalysts as SuccessFactors and Taleo get swallowed up by SAP and Oracle. You know what, though? Even if nobody wants to buy Cornerstone, even if the company can't poach any clients from its competitors as they're being digested by their new owners, this is still just a great story for one simple reason. The numbers are off the charts fabulous. In its latest quarter, Cornerstone signed 119 new clients, including NASDAQ, which is a very technologically savvy company, Liz Claiborne, Blackboard, as well as one of the world's largest insurance groups and a big investment bank. That brings the company's total to 805 customers. Get this, talk about accelerated revenue growth, 67% higher than a year ago. That's like right there with ExactTarget, which has got great accelerated revenue. Cornerstone's bookings were up 58% year over year. Spectacular. Now, here's the key metric, okay? The company's deferred revenue, and that's the most important way to look at these cloud-based software as a service companies. That's what determined how Salesforce.com moved. The deferred revenue of the software as a service company stood at $55.9 million as of the end of December. That's an increase of 40% from the previous quarter and up 65% year over year. Why does deferred revenue matter? Remember when at Salesforce.com we saw this? Cornerstone uses a subscription-based business model. Customers typically sign up for 3-year service contracts, allowing them to access Cornerstone software over the web. However, that means whenever Cornerstone signs a new customer, they're only allowed to recognize 3 months worth of revenue, even as these contracts last from 1 to 3 years. The rest of the money from these contracts gets counted as deferred revenue. And that's why this metric gives you such a clear view of the future, because we know this business is booked. So when we see a huge increase in deferred revenue, like Cornerstone reported in the last quarter, we know the company's future is looking real bright. It's cash, guys. Cornerstone knows it, too, which is why management set their initial 2012 revenue growth outlook above Wall Street's expectations, looking for a 48 to 51% increase this year. Now, I'm focused on sales here because Cornerstone, it's not earning anything. In fact, the company missed the Street's earnings per share estimates in the latest quarter with a wider than expected loss, so the analysts had to lower numbers. I know that sounds like a real drag. I know it sounds like a red flag, right? I mean, just terrible, and I shouldn't be talking about it. But here's the thing. Cornerstone missed because the company decided to invest in building out its business. They're trying to seize that opportunity created by the 2 acquisitions in the segment. And to do that, they're doubling the size of their sales force. For me, hey, that's smart. For a business that's growing as fast as Cornerstone is, I think that's actually the right call. All right, one more worry here because it's Speculative Friday. I'd like to give you both the pros and the cons. Salesforce.com recently bought a company called Ripple. I've looked at this, RYPPLE. And last week they rolled out their own human resources offering based on Ripple's system. And that could compete with Cornerstone. You know, I respect Mark Benioff and Salesforce.com. Nice interchange on at Jim Cramer on Twitter yesterday. And so it's not good news for Cornerstone. But I think the competitive threat is now baked into the stock. I think that was a large part of including some insider selling from equity firms, from private equity firms. That's what, mostly venture capitalists. That's what drove the stock down more than 10%. Here's the bottom line. Even when you're speculating, you got to keep your bat on your shoulder, wait for the right pitch, and only then take your swing. Cornerstone OnDemand has a red-hot cloud-based software business. Its competitors are being snatched up left and right, but it only became safe to recommend after the stock pulled back 10% from its high. Now the time is right. After the break, I'll try to make you more money.